Hello and welcome to this market alert. My name is David Cheetham, the Chief Market Analyst here at XTB UK, and today is the 6th of August 2019. I want to draw your attention to some really big moves that we've seen at the start of this week, with US stocks in particular making a lot of headlines for all the wrong reasons, with yesterday's drop actually the largest we've seen for US indices so far this year. You can see here the US 500 tumbled significantly. Began the days around 29.30 and fell all the way down to lows of 28.20. So over a 100-point drop here, around 3.5% for the US 500. Now the root cause of these declines began last week when we got a negative reaction to the Fed meeting here. You can see that we got another negative candle the following day when the US announced further tariffs on China. And then the straw that kind of broke the camel's back and caused that big plunge yesterday was devaluation of the Chinese yuan, which moved above the 7 mark against the US dollar for the first time in over a decade. In terms of levels to watch here, the low of the day at 27.76 is possible support, but we could be set if this price breaks below there for a retest of these lows that we saw earlier this year around 27.24. If we take fib retracements from the low at the back end of last year, which comes in all down at 23.18, you can also see these line up quite nicely with these prior swing lows, the 38.2% fib at 27.58 and the 41.4 at 27.35. So if price does drop down further and we do take out that lows, then this is a region of possible interest. In terms of the trend, you can see we've had a negative cross in the 8 and the 21 EMA, so that's this blue line here crossing below the 21 EMA. And this has happened a couple times in the past year or so. So you can see last October, when we got the negative print, it preceded a large decline, fell all the way from around 29.60 to those lows of 23.18. But after we got the positive cross, this year has been much better on the whole for stocks. However, we did get one sizable pullback, I'd say, around May time, where we got a negative print and we dropped from 29.60 back to that 27.24 region. So as I say, this is an area of possible interest to keep your eye on going forward. It's not just US indices that have been troubled by this news. Sentiment in general has taken a bit of a hit, and the German DAX here, you can see, had another big down day yesterday, and it fell over 1,000 points from those highs we saw just around the ECB meeting just a couple of weeks ago. Unlike the US, it has taken out the low that we saw around May time, but it has found some support this morning around 50% fib at 11.455, and that's also been aided by a little bit of positive data that we've had out of Germany. If we look at the calendar tab here, you can see German factory orders for June came in far better than expected, 2.5% pickup month on month, which smashed the forecast to 0.4%, and the previous month saw a 2% decline. So that's a really positive data point. And it's caused quite a nice bounce so far this morning, up over 250 points off those lows around 11.455. Now, it's not just stock markets that have been impacted by this news. We've seen safe haven flows in other assets, such as gold, which hit a 6-year high just this morning at 1474.70. And you can see the market has been pushing higher quite strongly in recent months, ever since it started to price in the chance that the Fed are going to cut rates. You can see we had a consolidation period here. We did have a bit of a false break higher, which came up to 14.52 and popped back down into this consolidation. Once we had this big push higher when that tariff news dropped last Thursday, you can see we've continued to the upside, break above 14.52, made those highs of 14.74 and 70. According to the EMA's market's clearly in an uptrend, and if you do get pullbacks, possible areas of support to keep an eye on are these recent highs, 14.52 and 14.39. If we do see a deeper correction and improvement in sentiment and stock markets regain their footing, then we could see a deeper drawdown back towards this 13.82 area. Now, silver is an interesting market to watch. Often trades with fairly good correlation to gold, and whilst we have seen a pickup here in silver, we've not seen quite as much upside. You can see price did burst up to its highest level of the year, 1664, but we're still below those lows that we saw at the back end of last year, coming around 1735. Just to show the correlation between gold and silver, if we go onto a weekly chart, take a very long-term view, you can see here going all the way back to the early 2010s, 2011s, and then we use this overlay tool with gold. You can see a fairly good correlation historically, but recently there's been a growing divergence. Gold has really been pushing ahead, as I said, up to a 6-year high, whereas silver is lagging behind somewhat. So if we do get a pickup in buying activity for silver, there is scope for a sizable move higher if it can break out those prior resistances and if it follows along the path of gold and pushing strongly higher. Finally, just a little word on FX. You can see here US dollar, Japanese yen. Japanese yen is often seen as a safe haven currency and benefits in these sort of moves. And you can see we had the big drop last Thursday when the tariffs came out, more downside on Friday. Yesterday, dropped down to its lowest level since those lows we saw around the turn of the year. And today we've seen quite a nice bounce actually. The market did pop quite a bit higher, up to around 107.10, which was previously support and has now offered some resistance. But this move has faded a little bit in the last couple of hours. So areas to keep an eye on here, the previous lows around the 105.15 and possible resistance around 107.10. Last but not least, we've actually seen a pickup in Bitcoin as well, possibly driven by this news. There is some people who believe Bitcoin is a potential safe haven currency, and it could even challenge, according to some people, gold as a sort of safe haven asset going forward. Whilst this is a bit questionable due to its volatility, we have quite clearly seen a pickup since this tariff news was announced last Thursday. You can see the market was trading around 10,000 there, and this morning it's pulled up above the $12,000 mark. So that's a 20% gain since just Thursday, and this has really coincided with that move higher that we've seen in gold, silver, and Japanese yen, whilst we've also seen stock markets declining. Okay, thanks for listening, and best of luck if you're trading these markets going forward.